Welcome to the ultimate roadmap to buying your very first home. Are you ready to take the exciting and sometimes nerve-wracking first step towards home ownership? We want you to alleviate stress during this exciting process. You've come to the right place because in this video, we're going to give you the exact roadmap that you could take to make sure that you buy a home the right way and alleviate all of the noise with high interest rates, high inflation, recession fears looming overhead. As a first-time homebuyer, you really need to dial in your finances, figure out exactly why you may want to be buying this home. How will this home help you achieve your personal and financial goals in the near term, 5 years, 10 years, and even 15 years down the road? Understanding your budget, this is crucial as it's going to determine how much house you can afford. Start by evaluating your monthly income and expenses. This will give you a clear picture of your financial situation. Remember to account for all of your regular expenses such as bills, groceries, transportation, and savings. Now, of course, we're talking about our personal financial budget there. So what we want to do when we're considering a home purchase as a mortgage banker and as a realtor, what I advise my clients to do is real simple. It's gonna be a number in your head that if you exceeded that amount for purchase, you would be very, very stressed out. And if you were under contract, you might not even be able to sleep at night. That number is what we're gonna talk about, our overall purchase price, which is gonna be part of your budget because that purchase price is going to break down into a monthly payment. We are seeing a lot of contracts being canceled right now with buyers getting under contract on properties that are maybe a little bit outside their comfort zone as far as the purchase price. And if you haven't gotten your finances in order, maybe you have a lot of consumer debt, you have some student loans, you have a big car payment, you just can't figure out your month over month budget because you're putting stuff on credit cards. Home ownership is going to be a big stressful thing if you can't figure out your overall budget. Once you have a clear understanding of your budget, you can use online calculators or seek advice from a financial advisor like myself to determine how much house you can afford to spend on a home. And one of the things I have for all of my clients and my viewers, a link in the description, we do have a mortgage calculator suite that I built out. Feel free to download it. It is for free. You just need your name, email, and then it'll live right on your smartphone. And you can use the calculator suite for home purchase. How much house can I afford? This next one, saving for down payment, obviously dovetails from your purchase price budget, right? So let's say for simple numbers, you want to buy a house for $600,000. Now, as a first-time home buyer, there's loan programs out there that can put as little as 3% down, 5% down, or even more. If you're a veteran and you qualify for your full entitlement of benefits, you do not have to necessarily put a down payment down. But in my personal opinion, if you can have a little bit of equity in the property that you're buying, it is wise because of course, the more money you put down, the less you're borrowing. Therefore, your monthly budget or your monthly payment is also less. So real quick, if you're viewing here, let's say that $600,000 example, if you were putting down 5%, what would that number be? Go ahead and leave your answer in the comments, but if you said $30,000, you are correct. The more expensive property that you want to buy, yes, that could be nicer, could be in a better part of town, so location, location, location. Be mindful that there are carrying costs for that property, there's upkeep for that property, there's a down payment for that property, and of course there's closing costs for that property. So just saving a little bit of money here and there may not quite be enough for your ultimate goal of becoming a homeowner. The down payment is a function of the percentage of the purchase price that you need to pay up front for the loan to value. If you put down 5%, as in this example, your loan to value will be 95%. Keep in mind, it's important to save for the down payment to qualify for a mortgage for the most favorable terms. But if you don't put down 20%, you may have to have private mortgage insurance, which is going to add slightly to your monthly expenses. Some quick tips for saving for a down payment. Obviously, consider cutting back on all discretionary spending, setting up auto savings, and doing a garage sale and selling whatever you may not need any longer. This next one is getting pre-approved for that mortgage. Clearly, you want to do this well before you get excited about actually going out and seeing properties, especially in today's chaotic economic environment with high inflation, interest rates that have been in a rapidly rising rate environment since they were during the pandemic times. So to keep a very, very level head, what we want to do is make sure that we're pre-approved. In my personal opinion, you want to do this about a month or two before you even want to start dipping your toe in the water to go see open houses, explore neighborhoods, look at those new builds, and start to place offers. Once you saved enough for the down payment, of course, we're on to the pre-approval for the mortgage. This is going to help determine how much you can actually borrow and what your potential monthly payments will be. To get approved, you're going to need to provide your financial information in the form of a loan application. Then we'll evaluate your credit score, review income, and talk about the debt to income ratio to determine your eligibility. The basic pillars of all mortgage products, no matter if you're a veteran, you're using an FHA loan, conventional, or one of those jumbo loans, all lenders basically look at you as a potential borrower with three major numbers. We're going to look at your FICO score, the loan to value for the property, so your purchase price or your potential purchase price, how much percentage are you putting down, and then what is your income. Your income is going to help us determine what your ability to repay the loan is based off of your credit score, your debt profile, and of course the carrying cost or the cost of this property or this potential property that you might be looking to get into. One of the great things here with the Just Livin' Realty team and Feel Good Mortgage, we do both ends of the transaction. I do the mortgage side. I can also do the real estate piece, but to keep our clients, kind of moving through the system really quickly, my business partner, Tony Amran, he takes our clients into the field, and the three of us, with you in mind, if you were the client, we work on getting the very best terms for the mortgage, and Tony will take our preparation that we do in our pre-approval to get you the absolute number one best sales contract price for that property. That's the key. That's one of the biggest, most overlooked things when first-time home buyers are looking to buy a property. They don't realize that the realtor needs the pre-approval, that financial piece done in advance. And our system is very, very good at getting everything cleared up, getting you ready for the field 100% so that he could take your pre-approval and negotiate that best sales contract. For instance, you might be going up against a couple other borrowers or people that want to buy a property. And if they are just pre-qualified, meaning that they don't have a really good, stable financial review done by a lender, Tony can actually say, hey, listen, we've done a full pre-approval. We're ready to move quickly on this property. We can close in, let's say, 15, 21, 30 days, whatever the case might be for the seller's requests in regard to the contract. Sometimes our clients even need to have what they call closing cost credits. Maybe you don't have enough saved for the down payment and the closing costs. We can negotiate those to be paid for by the seller, by the bank, or even by our team here. If you use both of us, we do have reduced closing costs for our clients because of course we're making money on the mortgage side and the real estate side. So as a package deal, if you use our services, we do help and assist our clients with their closing costs. These next couple steps on this roadmap might be the most fun and the most engaging for people, but if you haven't done the steps prior to this can really, really derail you as a first-time home buyer. Your stress levels might be so elevated that you feel that you're not making the right financial decisions because you might not have been fully prepared at the time that you want to go start looking for homes. So that's what we're talking about now, is looking for properties and making those offers. So finding your dream home. With your budget and mortgage pre-approval in hand, you're ready to start the exciting journey of finding your dream home. Considering working with a real estate agent, as I just mentioned, Tony, he can help you navigate the home buying process and negotiate on your behalf. So what we're gonna need to do during our meetings is make sure that you communicate your needs, your preferences, and of course, we're already gonna know our budget so that your agent can show you homes that align with your criteria. One of the biggest mistakes that we see with first-time home buyers is they don't get everything started well in advance. Most first-time home buyers are renting at the time that they buy their first home. One of the biggest mistakes is waiting far too long, like that last 3 months of your lease, to try to get pre-approved, find the right property, close on that property all before your lease expires. That is by far the number one mistake that I see first-time home buyers making. The reason why we want to give ourselves ample time is because we want to be patient and take your time so that you can explore all the different neighborhoods, attend various open houses, and compare properties. Don't forget to factor in the additional costs like property taxes, homeowners insurance, maintenance expenses, and all of that while evaluating homes. Once you've found that perfect home, it is time to place that offer and close that deal. So what's going to happen? You're going to be working with your real estate agent, and we're going to look at all of the comparable homes that might make sense or be the same size as your property, very similar in construction type, beds and bath counts, and overall square footage, to make sure that the contract that we start to negotiate with and our preliminary offer that we give to the seller makes sense with what properties have sold in the local area there, to make sure that we're not overpaying for a property. Be prepared for negotiations with the seller, and be sure to carefully review all the terms and conditions of the contract, including any contingencies, inspection reports, and financing details. Once your offer is accepted, you're going to enter into the closing process, which involves finalizing paperwork, inspecting the property, and securing your mortgage. Now, we call that the home stretch. Once you're under contract, there's a whole lot of busy work that's involved with analyzing the property, not only from an inspection standpoint, but the bank's gonna do an appraisal. You're gonna review hopefully a clear title report, and we're gonna start to then process what we call the transaction. So this is a very, very in-depth process that typically takes anywhere from 2 to 6 weeks, depending on the property. If you buy a new build, of course, that is a far longer transactional period of time. It should be a little bit exciting, but in my personal opinion, if you follow the steps necessary to make wise financial decisions, you can actually focus on the business aspects of buying a property that's going to best suit your family now and for the future, without getting wrapped up in the emotions of buying something for, let's say, $500,000, $1 million or more, right? Those are big, big numbers, but if you're prepared properly, you can accomplish anything. Remember, the home buying process is super complex, but with careful planning, budgeting, and of course, professional assistance by yours truly, you can successfully navigate through it. This is a major life milestone, and if you would like myself and Tony to be a part of that, we would welcome you with open arms as your mortgage and real estate coaches. We make it real simple for you to take the very first step to do so, which is that discovery call. Real simple. In the link in the description, you can either book a Zoom chat right away, or you can pull a pre-qual certificate, which is probably the most beneficial thing that you can do, because that'll help determine, based off of the little question and answer quiz that we built for you, it'll give you a basic dollar value, let's call it, that could be your starting purchasing power price point that we work to with our pre-approval, your budget. And if you subscribe, we will see you on a regular basis. So stay sweet, get out and enjoy those sunny days. We'll chat very soon.